Good morning, everyone. Darius Dale here to present our macro minute for Monday, November 1st, 2021. Happy November. Starting with markets, we got stocks up a bit, commodities mostly up, dollar up small, global bond yields up 2 to 3 basis points apiece. The big mover today, you got Japan's Nikkei 225 index up 2.6%. The LDP, the ruling LDP, held its strong majority in Sunday's parliamentary elections. The speculation amongst market participants is that it will allow the new prime minister, Fumio Kishida, to ramp up stimulus. So that's a good thing, obviously, for markets. On the economic front, we get the first batch of final manufacturing PMI data from around the globe for the month of October, and it was generally confirming of our post-Delta bounce view. So you got accelerating at China's Caixin index accelerating, Australia, Indonesia, Japan, Ireland, India, Russia, Netherlands, Greece, UK, all accelerating. Unchanged, nothing decelerating. We actually had China's official manufacturing PMI services and composite PMIs all slowing and ticking down. Korea and Switzerland ticking down, but obviously, as you can see, the balance was to the accelerating side. We got more stagflationary data out of the U.S. on Friday in terms of the real PCE reports. Spending on goods and services both slowed. Disposable personal income growth, ex-government transfers both slowed. Personal savings rate ticked down to the lowest level we've seen since 2019. Headline PCE and the core PC price indices ticked up. And then lastly, I'll take it to the chart here. We had the employment cost index accelerate massively to 3.7% on a year-over-year basis. It's the highest we've seen since, I want to say, Q3 of 2004. This is something we've been talking about in our macro scouting reports for the past few months, which is, hey, this quits rate that we're seeing in the JOLTS data is indicative of some supply side tightness within the labor market. The ECI, the employment cost index, actually tracks people who are at the same job and the sort of wage gains that they see at those positions. So we're going to continue to see wages keep an elevated floor under inflation metrics over the next couple of years alongside OER as well. In terms of what's overbought, what's oversold in our global macro risk matrix, currency volatility is overbought. The 30-year treasury yield is oversold. And then with respect to the risk reward setup today, we got S&P 500 3.2% downside versus 0.4% upside. Bloomberg Dollar Index 0.7% downside versus 0.9% upside. And then lastly, the 10-year treasury yield minus 5 basis points of downside versus 21 basis points of upside. So with that, Darius Dale presenting our macro minute for Monday, November 1st, 2021. Everyone have a blessed week out there. Cheers.